Good morning, hello and welcome to Trading Hour. It is 11 a.m. and here we are with the latest, and the headline is that the market is doing rather well. It is bulls in control. The Nifty, in fact, intraday has conquered 22,700 once again, and a lot of large caps are leading from the front, including banks today. I'm Surbhi Upadhyay. With me, as always, on the show is Reema Tendulkar. Reema, quite a good start to the day.
Oh, absolutely. And now we're just about 0.5% away from our all-time high levels of 22,795. So I think just about 100 points, right? I guess we can start the countdown. 100 points left for our all-time high levels. Today is also the Nifty weekly expiry. And banks, that's where the support is coming through. And one of the factors driving the gains in banks is the decline that we've seen in the 10-year yield in India. So that's boosting the bank bond portfolio. So that explains why the banks are outperforming, particularly PSU banks. The Nifty PSU banking index has a gain of more than about 2%, but even private sector banks like an ICICI Bank, Axis Bank are outperforming, and that's where the strength, the leadership is coming through. And it could be in courtesy on account of the fall in the 10-year bond yield in India on the back of RBI's, extravagant, the dividend that they've given. The metal index has weakened for the second day in a row on the back of weaker China demand and a stronger dollar. So the metal index is still down 1.7% now on the metal index. In terms of earnings, a lot of consumer names, so ITC, Page, Honasa, Bikaji Foods, all these companies will be reporting numbers, and tomorrow it's going to be Hindalco and NTPC that the street will track in terms of numbers.
Just a point, Reema, the bond market's shut today because of Buddha Purnima, but the anticipation is that with this bonanza, eventually there could be, once the budget is done in July, there could be some reduction in borrowing, and that could perhaps, that coupled with the fact that there's the inclusion in the global bond indices, including the JP Morgan bond index, more and more money will come in. And actually that's already been happening this year. This year FPIs have pumped in far more money in the bond markets than they have in the equity market, and that of course has been keeping yields fairly benign, with the expectation that perhaps they'll trickle down a little further. So banks are definitely leading this party from the front. But just to add, there are a lot of other stocks as well. I mean, look at something like an L&T, look at something like a Bharti. IT is a strong spot as well today. I mean, stocks like TCS, etc. are leading. Some of the consumer names like Titan. Consumer was a strong play yesterday. That's continuing today. So the short point is that this move that we're seeing in the market right now, it does seem to have, plenty of legs. That's what's playing out. But speaking about, of course, the big, massive headline that came in, after market hours yesterday, this bonanza that the government of India has got from the Reserve Bank. Now, the RBI has announced a record annual dividend of 2.11 lakh crore rupees for the government. The government, by the way, had budgeted just around 1 lakh crores by way of RBI dividend for the year FY24. But what the government is receiving is obviously double that amount. And this is also almost 3 times higher than the 87,000 crore rupee dividend payout that was seen in the previous financial year, which is FY23. Now, in a conversation with CNBC TV18, Finance Secretary TV Somanathan said that RBI's dividend will prove to be beneficial for the government and the government will pragmatically take future steps with regard to fiscal policy. Take a look.
Cash is a short-term thing. The revenue is important. Cash will fluctuate based on expectation. Cash is not something which can be managed, or I can't tell you how cash will be managed. But I can tell you that this dividend is good for the revenue of the government. It's good for the fiscal position of the government. It's always good. All revenue is welcome. We will only buy those bonds back which come at yields which we like. So this is not like when we are trying to raise money. There is no failure of the buyback. We have put out a target amount. If it happens, it happens. If it doesn't happen, it's okay, no problem. If conditions are tight enough, people will take the buyback. If they're not taking the buyback, then conditions are probably not very tight. So, that's a matter for the other side to decide on how much they want to buy. It would be definitely 0.2, 0.3% higher than what we expected as receipts.
0.3%
of
GDP.
The
number. Okay. Of the GDP.
Yeah. Is the delta.
Okay, that's, on the RBI's more than 2 lakh dividend. For the Nifty, it now continues to inch above that 22,700 mark. On the way up, it's banks. But other than banks, you've got L&T, which is, contributing quite handsomely, 1.7% higher. Bharti Airtel is a big mover. And some of that NVIDIA rub-off is showing up in IT names. So Infi, Wipro, also up more than 1%. But to get back to, the macros, Lakshmi Iyer, CEO of Investment and Strategy at Kotak Alternate Asset Managers, is now with us on the show. Lakshmi, morning. Thank you very much for joining us on this, big day. Your first thoughts on this record dividend given by the RBI to the government. What does it mean?
Good morning. It is definitely the much needed, I would say, the magical infusion or the magical portion that the markets were looking forward to, and a complete surprise. I would say more than double of what the markets were looking at, or including what was actually projected in the interim budget for FY25. So I think all in all, it is really a very, very big bazooka, which will have far-reaching implications, not just from a slightly micro perspective on the government demand and supply, but more importantly, from a larger fisc perspective and the government's ability to do maybe much more than what probably they would have intended to.
Lakshmi, hi, good morning. Great to be talking to you. Just double checking, right? Bond markets are shut today, right?
But
you're still in office. But you're still in office, so you're still working. All right, then we don't feel so bad. At least we're not pulling you away from a home holiday. But just to get back to the subject at hand, I think the big question since yesterday, 3:30 when this came out, has been what will the government do with this additional 1 lakh crores of bonanza, right? They budgeted 1 lakh, they've got over 2 lakhs. And that's been the debate, whether this will go in pruning the fiscal deficit target, whether they'll simply spend it, whether they'll reduce borrowings. What's your best guess?
So, well, Surabhi, all of these things are possible if you ask me. It's not that it's either or, but certainly, as I mentioned, the government gets much more elbow room to be able to fructify some of the capex-led initiatives which were strongly required. Well, one school of thought which markets have been debating also, could we see some rationalization in the tax structure to, ensure or to enable the bottom of the pyramid to pump prime some consumption? I think these are some of the thoughts which are definitely going on. But if you look at the broad math, this would be close to about 60-65 basis points from a GDP perspective. Now, from a fiscal perspective, the impact could be close to about 40 basis points or 0.4%. Now, will the government decide to probably use that ammo to pump prime its capex and infra-related spends, which is what they have articulated? That could definitely be, and that's top on our list at the current juncture. And mind you, this is just the RBI payout. There is still the PSU payout, which is impending. So I think the booty is pretty strong and formidable, and therefore that opens up a plethora of opportunities for the government as we speak.
So early right now, but how much do you think the capex by the government goes up when they announce the elections? Anyway, they've been spending big money, but what could be the incremental growth that we're looking at now?
So as I said, they can divert maybe half of that. So assuming the impact on the fisc was, say, about 40 basis points. So about 0.2% and 0.2. So probably half and half is what they could probably divert towards the more productive sectors. And for long, capex has been a much desired wish list from a market standpoint, specifically from the capital market standpoint. So I think at this juncture, as I said, too soon to say, and you rightly observed, but probably towing that line at the current juncture, given the fact that the markets had already reconciled to the fiscal deficit that was already outlined, allows some of these to fructify.
Okay, Lakshmi, now let's talk about the market impact. The market obviously will react tomorrow, but the equity side is already reacting. I mean, the rally in bank stocks, I think, is, part of that is resting on hopes that yields will keep moving down. Now, we're already at just about sub 7%. What next?
Yes, you're bang on. So as I said, because it has far-reaching implications on the larger market, including the capital markets, the PSU as a theme, for example, we've been quite constructive on. We've seen buoyancy there. The banking space, which kind of has been, a kind of subservient to the broader markets, that's doing pretty well. From a bond markets perspective, definitely this will this is in tandem with the buybacks which have been announced, which has got tepid response. But also, if you see the first quarter treasury bill supply also has been cut. So this comes as superimposing as a stronger catalyst, which means are we headed towards 6.75 on the 10-year benchmark in the very near term? The answer is yes. I think you look at the FPI or the foreign portfolio investment buying, that's also pretty strong and robust. Year to date, which is a calendar year, we have crossed 40,000 crores in terms of net purchases. And I think the momentum is likely to continue.
Okay, all right. Lakshmi, good having you on this big development. Thank you for joining in and giving us that quick analysis. So that is the view coming in from Kotak Mutual Fund on the dividend bonanza that the government has received and the implications for the money markets. We, in fact, were catching up with a lot of economists as well to try and understand how this perhaps could impact the fiscal math. Listen into the opinion that we got in the morning.
The immediate impact with respect to market liquidity is, of course, nothing. This is going to come with a lag. And the amount that is done, I mean, look, you can think of the budget both in terms of cash accounting as well as accrual accounting. So it doesn't really matter whether it falls under the 24-25 budget or the 23-24 budget. If we were going to have shortfalls in other sources of revenue, this certainly acts as a balancing factor. So therefore, it's a piece of good news as far as the fixed income market is concerned when we are looking at from the supply of bond perspective. So from what I'd like to see, as I'm a fiscal economist, of course, I would like this surprise addition from the dividend to be used as a saving tool as opposed to accommodating expenditure.
We were putting out in our notes saying that there is a possibility that the RBI dividend will be significantly higher than what the government has budgeted for. And so that way, it's not that big a surprise for us. Yes, it means that the government has three options in some sense. One is that it can reduce the fiscal deficit, 0.3% of GDP, as you mentioned. What the initial thought process was that the government will do only somewhat marginal tweak to the interim budget numbers, because the interim budget itself was quite detailed. Now, with this more than 1 lakh crore extra kitty, the budget maths will have to be reworked, and it will become very interesting, and the market will keep on speculating until it's actually announced.
It's a substantial fiscal bonanza that has come in. We think the government could therefore choose to reduce the deficit marginally when it presents the final budget in early July, which is what we're expecting, but also leave some cushion for any unexpected shifts that might happen on the revenue and the expenditure side. This is actually going to add to the cash surplus that the government is sitting on. This could very well go, above 5 trillion INR, and therefore some sort of a reduction in the borrowing, could happen. Again, the details of this are likely to get announced in the budget. And as Somiran was saying, it's really positive from a demand-supply environment. So our own forecast is that the 7-year as well as the 10-year bond yields could drop to 6.75%.
All right, there you have a lot of views coming in on implications for the bond market and for the fisc, given the RBI bonanza. Well, with that, let's take a very quick break. We'll come back on the other side and get you the latest in the commodity markets.
Welcome back. Let's talk about commodities. There has been a retreat in base metal prices. Manisha is now joining in, and she's going to be talking about copper. Hi, Manisha.
Hi, Rima. Thank you for that. Well, yes, we've seen copper prices gain about 10% in the last 1 month, almost 30% in last 3 months. But there is some profit taking that we finally are seeing onto this one. Actually, it is across board, as you said. We have seen the US Fed meeting minutes come in yesterday, suggesting that the inflation is still sticky and a rate cut in September perhaps is not a probability. This is the reason we've seen 4.5% of decline come in for the copper prices. After the US Fed meeting minutes, we also have seen a decline in US, rather strength in dollar index. And that seems to be weighing onto the markets as well. For copper, it also has been about the kind of price moves that we have seen. pardon me, we've seen an all-time high in the US markets, on LME, in Shanghai and the Indian markets as well. And it has been a one-way rally for last 2 months in case of copper prices. So some profit taking is what the street anticipated you could be looking at for in this metal. If you look at the near-term demand, that in China also seems to be slipping. Well, the metal prices have been rising because the street believe that there is not enough mines or new projects coming in, and a longer-term demand until 2025 or 26 is something that these supplies will not be able to match or fulfill. Now, if you look at the near-term demand, that is not so strong, even as China has been coming out with various stimulus measures, also looking to buy all unfinished projects. Even after that, the demand for the near-term really has not picked up. When you look at the speculative activity, well, that's an important one. If you look at overall CME standing right now, it is the net longs that have come in from the speculators. The producers are net shorts to the tune of 1.04 million tons. Now, within that as well, there are reports that almost 100,000 tons of copper is en route to the exchanges from US to ensure that the sold positions or the bearish positions will be delivered into. Apart from that, there also are reports that nearly 20,000 tons from Chile mines also is coming into US. So there's a lot of copper in the international markets which has started to move around, which also tells you that the premium that the markets were looking at in sense of cash to 3 months seems to be coming off right now. There also is a very interesting statement that has come in from International Copper Study Group, which says that with the kind of movement that we have seen in physical copper, you could be ending this year and the next as well with copper surplus. So until the time the demand really starts to come back, or you see an interest rate cut, or the China data starts to come in positive, I'm assuming that you are looking at consolidation coming in for copper and various other metals.
Okay, all right, got it. So some profit taking coming through after record highs seen earlier. Thank you, Manisha, for the latest from the copper markets. Well, with that, let's shift focus back to equities and how the equity market is looking at all the volatility in the run-up to the big electoral result. Investor Capital Services has recently written a note on what the voter turnout data in the recent Lok Sabha election phases perhaps reveals. They are arguing that voter turnout is influenced by perceived strength of parties at the state level, local issues, voter fatigue, national alignment of parties, and weather-related issues. To discuss more about this and the takeaways from the report, we have with us Mukul Kochhar, Head of Equities at Investec Capital. Mukul, great to have you on the show. Thank you for joining in. And very interesting report. And, I can just go back and look at the last 3-4 weeks with the VIX hitting record levels, a lot of volatility, profit-taking. And at the center of it all was exactly this, that voter turnout seems to be low. Though I think we are still averaging in the 60s, which is not too far away from the mean. But what is your sense on the link between voter turnout and the profit taking that we've seen on the street?
Yeah, so Surabhi, I'll take you to a period before the elections. And, what was remarkable is that, something that influences politics and hence economics in the country for the next 5-10 years was completely in the backseat. It was a given, that everything's going to be okay. So elections were not a discussion point, for equity investors at all going into the elections. And then suddenly this curveball was thrown where the first phase had a drop in voter turnout, and all kinds of discussions started coming to the fore. So the equity volatility was, derived from the fact that this was totally unexpected. A curveball was totally unexpected. All the opinion polls going into the elections were one way, with the lowest being India Today Mood of the Nation polls at 304 for BJP. So, anything that challenged, even if remote possibility or small possibility, challenged the status quo became a discussion point, and hence the increase in VIX. So that's essentially what happened. I mean, it was because we were very complacent, because we weren't looking at the elections as an event altogether, that suddenly it was thrust upon us. As we look into the voter turnout data and do that analysis, I think the way we stand today, given the level of information we go back to the opinion poll, and as we've discussed in the turnout data, it doesn't really reveal anything advantage for one party over the other. So the last well-known data point for us is still the opinion polls that came in right before the election. So unless something really changed in the last month for the electors, I think the opinion polls right before the elections are the data point that we should focus on.
So if the BJP gets about 300, 303, which is similar to what they got last time around, what will be the market reaction? Will they be okay with it? Will we continue to move on? Or will there be some disappointment? And one more question, Mukul. What is smart money doing ahead of this election? They've made a lot of money. So have they just booked some profits? They're holding on to cash position and just waiting to see the outcome?
Yeah, so I'll answer both questions. So first on the number expectation. So if you did the math prior to the election, the number that was going out for the ruling alliance, it was a stretch, right? It was difficult, and it's also been explained by some people as well as an aspirational number to sort of give a target for people to go after, right? Realistically speaking, that number looked a stretch. So I think in the mind of investors, the 303 becomes one operative number, because anything over that you can make a safe argument that the ruling dispensation or the current dispensation is gaining increased acceptability, and hence that can continue, right? So 303 means more penetration into the country by the ruling dispensation. More than 303, ruling dispensation gets stronger. Less than that, you can make the argument, hey, we peaked on that, so what happens after 5 years? So obviously a weaker statement. And then the next operative number is 272, which is the absolute majority that allows you to have a stable 5 years of government, right? So 272 and 303 are the numbers. Between 272 and 303, there can be some argument that BJP has peaked. Above 303, of course, you can start making the argument, hey, there's still room to run. So that answers that question. Which are the numbers to focus on? I think 272 and 303 are the two numbers to focus on. The next argument is, what does the market do after that? If we do get over 303, I think the market is quite well priced. I don't think we do much. There is going to be some relief rally. And what has the volatility come from? On the desk, what we see, the smart money, as you said, the institutional investors, let's just call them, it's pretty much business as usual. I haven't seen a change in stance or flows from institutional investors on our desk, through this volatility. I think where the nervousness or where the more trading is happening is, I think my sense is more on the retail side, as well as ETF flows globally, which are also retail driven. So I think institutional money has remained smug through this entire volatility, is my opinion, and the retail is where the volatility is taking place. And post elections, we expect a little bit of a rally, but not that much. Yeah, sorry.
No, we're just hearing all your points and pretty interesting ones, Mukul, but unfortunately a little short in time. We have a very big interview also coming up with Infosys, but we would really want to catch up again, let June 4 get over, and then want to get your view on the market call once this big event is out of the way. What should investors be focusing on? So look forward to that conversation. But thank you for this. Thank you for the pre-election views and how to read a lot of the electoral cues that we are getting. Good to have you on the show. All right, we'll take a break on that note, come back with more on the markets in just a bit.
Well, hello and welcome to the CNBC TV 18 special conversation. The buzz continues to be around AI and generative AI specifically. Look at the standout blowout numbers that have come in from NVIDIA overnight. The company crossing $2.5 trillion in market cap. It is now the third most valued company in the world, surpassing, of course, Alphabet and Amazon. Joining me now to talk about Infosys' AI strategy, AI opportunity, as well as the metrics that they are going to be using to measure success and return on investment, and of course to talk about the outlook as far as IT spending and discretionary spending and the deal pipeline is concerned, is Salil Parekh. Salil, always a pleasure. Appreciate you joining us here on CNBC TV 18. It's good to speak with you. We haven't spoken to you since the earnings, but you know, as I pointed out, look at what's happened with NVIDIA overnight. Performance which is standout, blowout, and we get you on a day to talk about the AI opportunity. So let's speak about Infosys in specific. At the end of your earnings call, you spoke about how the company has generated 3 million lines of code using LLMs. You called it industry leading. Give me a status check on where things currently stand as far as Infosys' AI strategy is concerned.
So thanks, Shireen, for having me here. Always good to be here. On generative artificial intelligence, that's really a completely new way of looking at things. What it's doing is basically manufacturing intelligence, whether it's tokens or whether it's assistants or whether it's agents. So that example of the lines of code is something that was created by large language models that we have trained on very narrow sets of data for specific large organizations and also for internal. So this is something extremely exciting with our clients. It's different from what's going on in the consumer world. So this is for large organizations. In the consumer world is what you're seeing and what you just mentioned with some of the examples. In large organizations, the work is really focused on how do we connect with customers better, how do we make things more efficient, and that's where generative AI is starting to help by the creation, manufacture of intelligence. Our approach has been make sure we work across the board with large language models on narrow data sets, what we call narrow transformers, and now even what are called small language models, where within a large organization, we take that data and make things better. For example, we've done something with a bank where they've been able to extract information, analyze it, sort it, and improve how their credit rating works. We work with a telco where they've brought together all their customer sentiment and through their customer service area, improve how their service level is, how they connect with their customer is, and reduce the cost. So this, the level of impact is just phenomenal that we are seeing. It's small still because we're working today on 200 projects, but as we go through, as the economic environment changes, we see more and more of this coming to organizations.
You know, Salil, as you pointed out, it is still small, but you believe that the opportunity is going to expand as you move along. Now, what could this 200 become over the next 3 to 5 years? You're currently working on 200 projects. Give me the kind of headroom that you see for potential growth. Also, quantify for us, you know, in terms of the revenue expected by the work that you're doing as far as these specific generative AI projects are concerned. You know, what could that potential deal pipeline look like for you as well as revenue?
So there, we have not shared externally things in the nature of the metrics you're mentioning. What we anticipate in terms of opportunity is as the economic environment changes, both for cost efficiency, but also for customer connect growth, generative AI is going to be more and more spreading in large organizations. Now, the thing with large organizations is there's a coexistence of technologies over the years. You probably well know that there are many large organizations that are still using COBOL. So we have everything from COBOL to generative AI that's going to work in the mix, and that's where we are very good with our AI-first approach, making sure all of that is moving to the new areas. One statistic which could be quite interesting, for example, is the way we are training all of our employees. You know, 6 out of 8 employees at Infosys are getting trained on generative AI and artificial intelligence technologies in different levels, because there are a large number of these new models, and there's different ways to work on it. And we have areas, for example, software engineering, process optimization, customer service, different areas in which we're making this use.
Yeah. Oh, I understand, Salil, that you haven't given us any indication of the revenue expected on account of the projects that you're working on generative AI, or in fact the deal pipeline that you have the ambition to pursue. But I still want to understand, what are the metrics, for instance, that you will use to measure success or use to measure return on investment? If you could share that with us. And this is not specific only to Infosys, because many surveys of CEOs at this point in time do indicate that everyone is grappling with this. How do you measure the generative AI adoption and the KPIs associated with that? So what are the KPIs that you're looking at to measure success?
So for us, it's really in terms of the objectives, it's where the impact is. So there's impact we see with our clients in how they connect with their customers, what they're doing with their employees, and how they're optimizing their operations. And for each of those, there are benefit metrics, whether it's an improved time to market, a better level of connect with customer, a much more efficient, therefore less costly process. And those are the sorts of metrics our clients are looking at. Today, the discussion on generative AI, at least in the broad world, is much more oriented on what individuals' use of generative AI is. Our intention and focus, because of our business, is much more with what large organizations are doing. And there's a very specific way that we've developed, where we see now many of the clients looking at more carefully this approach on looking at the data within a client organization. The foundational blocks really to make anything work with generative AI within a large organization, first is data, making sure both the structured data and unstructured data and social media is properly analyzed and captured. And the second is the cloud, where you need that level of infrastructure, whether it's public cloud or private cloud, that helps to leverage it. And we are now, through our digital move over the last few years, very strong on both cloud and data, and that's helping us as we connect with our clients.
Salil, let me address this question a little differently, and I'll pick up on a note that HSBC has put out, which asks the question if generative AI will actually be deflationary over the medium term. And it says that a decent share of revenue for Indian IT comes from low to medium complexity coding. So there is a potential threat from generative AI as it looks at to automate part of this work. How do you respond now to something like that? You've talked about the opportunity, but it's also being seen as a potential threat for the Indian IT services sector.
So for us, what we are seeing is it's opening up newer areas where we can deploy generative AI. So the example I gave you of the credit or of the telco, these are things which could have been done with a lot of effort, but with generative AI, it becomes much simpler and much less error prone to do. So we are seeing an expansion of that opportunity set that's available. And then we're seeing productivity benefits. For example, even in the way software engineering is done, we see benefits of productivity there, where we will see efficiency used to allow people to do different things. So at this stage, given it's a small size within our business, we don't see a big change, but we are seeing both types of work at least show up from our client organizations.
Salil, generative AI, as you have pointed out several times through the course of our conversation, still nascent and small piece of the pie that you're looking at. But if I were to ask you, and this is what we heard from TCS, they said that the AI pipeline is actually doubled to 900 million. Could you give us an indication of where things currently stand for Infosys?
So there, my view, first, we don't share a pipeline view outside of our overall large deals number, which is our focus. But what we are seeing we were a few quarters ago doing things which were more like proof of concepts. Today, these are actual projects with clients where they're seeing the benefit. And that's a huge change. And we see every client discussion a combination of that. Now, when you look at AI, there are things to keep in mind. Artificial intelligence and machine learning is something we've been using for a very long time. What we are referring to in this new change, this manufacturing of intelligence, is generative AI. So if there are discussions on metrics, we want to be clear as and when we share them, it's more focused on generative AI.
No, I get that. I'm still trying to extract a number from you, at least a ballpark number from you. But, Salil, you talked about how 6 to 8 people or 6 to 8 employees at Infosys today are being trained on generative AI. So I also want to understand from you what this eventually means as far as your hiring trend is concerned. Because if I were to look at, what has happened on hiring at this point in time, down about 7.6%, almost 8% for the quarter, declining by a little over 26,000. So what is the hiring strategy going to be? I know that you've said that it will be driven by agility, but what does that mean both in terms of the kind of people that you hire, what you do on campuses, and the number of people that you intend to hire going forward?
So there, Shireen, it's a combination of various parameters. So one, as of course you know, over the last several quarters, the economic environment has been slowing. And we've seen a lot of the digital transformation work slowing down. Most of what we are seeing in terms of large programs are cost programs, efficiency programs, automation, and consolidation of partners, those sort of programs. And that's the reason where we've seen less work on the digital transformation side. Now, the point with generative AI is much more on what we see as a trend in large organizations over the course of time. What we think in terms of hiring, as we see the changes, as interest rates come off or the inflationary environment comes off, and we see the economic environment where large organizations are starting to spend on digital programs, transformation program, we will see that starting to come back.
So at this point in time, you're not seeing any visible signs, any incipient signs of a pickup as far as digital transformation projects are concerned. And, again, I come back to the hiring question. Attrition has been about, 12% for you. Utilization continues to be around 82 to 84%. So what is the hiring trend going to be for you in the foreseeable future?
So there, we have what you described earlier, quite an agile hiring model where we go to campus, but we also recruit campus graduates through the quarters, and that will continue. We also recruit lateral hires in, that will continue. And as we see the discretionary work or the digital transformation work starting to come back, more and more of that will come through. We've not at this stage given the annual target of hiring, but we are remaining agile as we see changes happening in the environment to make sure that we are ready to support our clients for that.
But do you see the absolute number being lower, significantly lower, given not just the economic environment, but also the benefits accruing from higher productivity and so on and so forth?
I think, again, because these are two different factors, the generative AI piece or productivity piece is on a small footprint today in terms of what we are doing with it. The economic environment is what was driving a lot of the digital transformation work, and even some of the discretionary spends, and by different industry was at different stages. As we commented at the results time, the discretionary spend, we've not seen a change at the end of Q4 or at the start of Q1. So we will wait and see how that plays out. And based on that, we will see what the environment for recruiting is and what the environment in the future is for digital transformation.
Salil, you talked about discretionary spend and you said that at this point in time it looks like pretty much around the same levels. But are there any optimistic signals that you're picking up from clients at this point in time? Because while geopolitical tensions are escalating, the US markets and the US economy continues to be strong, continues to be buoyant. So are you picking up any indications from clients on doubling down perhaps or picking up the pace as far as discretionary spends are concerned?
So there, one of the comments we'd made again during the earnings time, which holds, generally the discretionary spends approach looks similar at the end of Q4, start of Q1. We'd also said on financial services, we see a little bit more activity than we'd seen in Q4. And the same thing is visible to us today. That, coupled with what we see people working across the board on cost efficiency, and then in a smaller way with generative AI, is what we see as the outlook today.
Okay, speaking of outlook, let's talk about M&A. You did an acquisition in the engineering services space for 450 million. Potential M&A targets, will you be looking at Gen AI capabilities much more, given the fact that that continues to be an ambition that you want to bolster? Explain to me what will drive the M&A strategy for you from here on.
So there, we have done a phenomenal acquisition in engineering services. Actually, we did two, a smaller one and a larger one. Both are very strong. The larger one focused on automotive work. This is a company from Germany, but working across the world. It's an exciting space. We already have a very large business in engineering services, and we see good traction for growth. We will continue to do. This environment is a good environment for us to look at acquisitions. We continue to have a strong balance sheet. We generated 2.9 billion of free cash last financial year. So we are well set for that. We're looking more in spaces which are related to that. So for example, we look at engineering services. We look at some other SaaS areas. We look at geographies as well. There are various geographies around the world which are doing well, and we're looking at those as a expanding footprint. On generative AI, there is not so many companies which are doing services, so there's not so many areas to look at it. But if something comes, we will of course look at that.
Salil, you said that this is a good environment to go shopping, and you are looking at acquisitions, to add to your capabilities as well as enhance your geographical penetration. Are we likely to see, deals close in this financial year? Are things looking hot on some potential targets that you are looking at this point in time? And what's the appetite in terms of size?
So there, again, as you've seen over the last several years, we've done small acquisitions which have done very well for us. This one is a similar one, slightly larger. We are open to doing things which are in that type of a size range. There's a lot of discussions, but with acquisitions, you never know till a lot of the parameters come together, including a cultural fit. So it's like difficult to predict what it'll look like, but we are definitely in several discussions and keeping an open eye given the macro environment for acquisitions.
Okay, an open eye on acquisitions, but let's also talk about large deals, Salil. Robust at 17.7 billion the last quarter, up 80% year on year. And you hope that the benefits of that will accrue to you in FY25 as well. How confident do you feel about building on that momentum?
Well, that's going phenomenally well. So what that does is it gives us a very strong foundation for this financial year. It was the largest of large deal values that we've had. A net new, or the new part of it, not just renewals, was very high. And most of those deals were on cost and efficiency. There were some on digital, but mostly cost and efficiency. And so that is the sort of market environment we're seeing. What that means is we believe we are very well positioned to work with clients, even when they want to consolidate partners and they want to look at cost and efficiency, because we have automation, lean, which has been working extremely well. And now you add a little bit of the productivity part of generative AI, that gives an added boost to the whole business. So we feel strongly the pipeline is on cost and efficiency pretty good, and we will continue to see good traction on that.
Okay, a quick word in on margins as well. Salil, the margin guidance stands at between 20 to 22%. But if I could borrow from TCS and ask you to give us a margin beacon, for the medium to long term, what could we expect, especially with all the changes that you're bringing about, not just in terms of cost optimization, but also in terms of the opportunities that you see?
So there, I think you talk about a very critical part of our business. We launched a margin program inside the company about a year ago, and last financial year we already see strong traction. It's got 5 different areas focused on. Within that, there are 20 initiatives. Each of those are moving well. So we feel very comfortable with where that program is, and that will support our underlying margin ambition. In terms of the beacon, as you know, we don't have a view that we share externally beyond the financial year, but we have very high ambitions inside to keep on working on that margin program as we go through the next several years.
Well, I know that you haven't held out a number, but since you talk about having a very high ambition on the back of the work that's already being done, give me a range. What is the kind of ambition that you have set for yourself internally? What could that potentially look like? I'm not holding you down to a guidance, but what's the ambition?
So internally, we will not share the number externally, but internally we have these levers, and the way this program is working, our CFO Jayesh is driving it personally, and we have buy-in and drive from a top leadership in making this happen. So my feeling is that this is going to give us a good set of results over the next several years.
Well, speaking of results and that guidance that you've been held at, Salil, we're pretty much through the half of 2024, and you, of course, have a grip and a pulse check on what's happening with your clients at this point in time. The possibility of being able to deliver on the or better on the guidance held out, is that looking likely at this point in time?
So there on the guidance, we are very clear with the guidance was 1% to 3% on a constant currency basis, the growth. We will, of course, relook at the guidance at the quarterlies at the end of it, so we'll come to it in a few weeks. But at this stage, we confirm the guidance at 1 to 3%.
What gives you comfort, or what gives you confidence today, Salil? We are, of course, talking about many of the uncertainties that continue to prevail, as well as some of the headwinds. But where do you see the tailwinds at this point in time that could perhaps get you to review your guidance higher?
So what gives us comfort for the 1 to 3% guidance really is one, the large deals, which was really exceptional, so that gives us a foundation. Second, we see the discretionary spend has remained about the same, which has not become worse, which gives us some comfort. It's not changed to positive, but it's the same level at the end of Q4, start of Q1. And then a little bit on financial services that we saw the movement to a small, better movement, which gives us a positive. And finally, generative AI, where we've completely transformed the company. So as that starts to pick up, whenever that happens in our revenue, that gives us some support.
So again, and I know that you're probably not going to give me a number, but when do you expect that inflection point to be, when you start to see the work that you're doing on generative AI kick in as far as revenues are concerned?
So that, Shireen, is not that easy to have a date on, because there's a lot of global factors that will play into it. Essentially, when will large organizations start to spend on digital programs again? And that part of that will be spent on generative AI transformation program. Right now there is early projects which are small projects. So it's difficult to say when that will happen, but we know that all of these are cycles, and as the cycle plays out, we will start to see some benefits.
Salil, you said that Infosys is transforming itself to be future ready, to be ready for a world where generative AI becomes much more significantly adopted, that is. In line with that transformation, what about management structure? What about people coming in, especially at the senior level? You saw a plethora of senior level exits. Are you looking at bringing more people on board? Are you looking at changing structure in keeping with the kind of transformation that you envisage?
So there, we've been extremely fortunate. We've had a really strong leadership team. So we have all of our leadership positions filled with people from internal movements. And it's quite unique if you look at what we have. We have individuals in the leadership team who work with Infosys for 15, 20, 25 years. In fact, yesterday we celebrated someone who's finished 20 years in the leadership team. 2 weeks ago, it was 25 years. These are people who have worked with each other through those years. And a company like ours, in an industry like ours, is very international in different places. So that ability to work as one Infosys, to know each other, makes a huge difference. And I think it's a big differentiator with anyone else who has to build teams by hiring from 6 different companies at different levels. And that is something that's maybe not well appreciated, but for us a huge advantage. And we think that's a benefit that we are playing out pretty nicely.
Salil, before I let you go, I want to come back again to the jobs issue and to the workforce issue, because many companies at this point in time, you can call it right-sizing, downsizing, reorganizing, so on and so forth. And many are using AI or generative AI as perhaps the reasons for why they believe that they are right-sizing, downsizing, reorganizing. Is Infosys looking at that? Is that a possibility at all at this point in time?
No, we are not doing any of that. In fact, others in the industry have done that. We've been very clear that that's not the approach we are taking. In fact, my own view is, for large organizations, all technologies will coexist. We at Infosys are very strong in generative AI, and over the next several years, we'll have more and more people joining us who become experts in generative AI, and we will be serving the world's large organizations. So for us, the ongoing view is an expansion, both over years with clients and with the number of employees.
So my last question to you, when you talk about a transformed Infosys, what are the 3 attributes that you believe will reflect the kind of transformation that you are working towards and you're hoping for?
So for us, really, the transformed Infosys is everything we do today, like any of our service offerings, things which were more traditional, everything is infused with AI and generative AI. All of our employees are trained on that, and the work we're doing with clients, we track metrics on various rankings, and we are now leading in several of those rankings as an AI-first company. So those are the elements of transformation that we're looking at, and all of that then translating over time to increase client relevance, increase work with clients, and overall benefit for all of our stakeholders. So those are the metrics in terms of the transformation that internally we are driving now.
Well, I look forward to hearing numbers from you in terms of what that transformation will finally result in, and also the work that you're doing on generative AI, when that is expected to kick in as far as revenue contribution is concerned, and how much. But Salil Parekh, always a pleasure. Appreciate you joining us here on CNBC TV 18 with a deep dive into Infosys' AI strategy as well as the outlook for the sector going forward. We will take a break here on CNBC TV 18, but a lot more coming up. Don't go anywhere. We're back in a moment with more.